Hello everyone. Some of you may wonder if investing in cash flow rental property is right for you. You may wonder why many millionaires become so because they are investing in real estate. After investing in cash flow real estate and other cash flow assets for over 2 decades, I will share my experience, the pro and the con in the later video in the future so that you can gain insights helping you to decide whether investing in cash flow real estate can fit into your overall financial plan. If you are new here, this channel is about investing in cash flow real estate, achieving your financial independence, and make an impact. My name is Korianne, and I achieved my financial independence when I was 35 through cash flow rental properties after consistently investing in cash flow property over 8 years. I love putting this content together, and it took a lot of time and effort of me and my team. So I ask for your support by clicking the like and subscribe. This helps me out a lot because I wanted to empower 1 million people to get educated about investing in cash flow real estate to build their financial independence and be in control of their finance. Why do I like investing in cash flow real estate? The reason number one is I understand all aspects of residential real estate well and continue learning every day to be aware of the current market trends and proactive in my decision makings. And reason number two is I want to be in control of my investment, and preserving our capital investment is my number one priority. I also like real estate because it's a tangible asset, and I know everyone will need a place to live. This is for residential properties. Home is the basic human need. I can minimize my risk by knowing how to select the real estate market that has demand for housing and be selective on the location within a city where I can have a great products to offer to my renters who are my ultimate customers. Because of its safe and healthy neighborhood that they can raise their young children in, and in long run, I continue to attract the right tenant for my property. It is a win-win business. And reason number three is I enjoy and appreciate a few keys of the benefits investing in cash flow real estate investment offer. Cash flow real estate is an ideal investment vehicle that allows any of us to achieve financial freedom when we have the plan and implement it. Let me break down some key components so you deepen your knowledge in this business. Cash flow real estate is not just about the monthly cash flow now, but it can generate generational wealth for years to come if you hold on to your investment long enough. I is for income. It's very important to buy cash flow real estate that produce positive monthly cash flow. And if you plan to achieve financial independence, then this is critical that you consider buying real estate property that yields monthly cash flow from day one. For example, if you only need $8,000 per month cash flow income to be financially free from your 9-to-5 job, then you should focus to invest in cash flow properties that generate healthy monthly cash flow that can add it up to the marginal $8,000 per number that you are shooting to reach your financial objectives. The idea is to generate a passive income that can cover all your family monthly expenses. It can be less or more depending on each lifestyle. If you buy a fourplex that produce a $1,000 monthly cash flow, then you know that you only need to save enough money and continue to buy another 7 more fourplexes to reach your financial independence. Or even bigger project when you have the required down payment. Each of us has our financial objectives. The great thing about cash flow real estate investing is that it offers many strategies and exits that you can pick to tailor to your investment journey. In the beginning years, I have invested in new fourplexes so that I can increase the monthly cash flow sooner and get a good head start in stocking up my overall rental income. D is for depreciation. The IRS allows you as an investor owner to depreciate the rental properties that you rent out to others. You can also take a tax deduction on the money that you pay for the rental improvements, like adding a new bathroom, upgrading the kitchen, and many other items. You cannot depreciate the land because it does not wear out. If you have a property costing you about $400,000, 20% is the land cost. You can deduct the rest of $320,000 over 5, 10, 15 years or 27 and a half years, depending on which part of the property. So let's assume your property generates about $5,000 per month in cash flow income, and you can deduct the depreciation of $11,000 per year. You still have the capital loss of $6,000 after claiming the depreciation. If you can declare that you are a real estate professional, there are additional tax benefits, and I highly recommend that you consult with your specialized real estate CPA for your tax planning. I just want to do a short illustration here so that you can get the concept. As I just shared about depreciation, I want to share a few great real estate books that I read and saved me a lot of time with my CPA when we do tax planning. Understanding and knowing about your tax benefits can save you a lot of money in the long run. Tax is the biggest expense for every of us. I went to a tax event in Arizona by Diane Kennedy. She was a real estate CPA. She wrote a few great books related to tax and real estate investing. Real estate investing for loophole for the rich, and making money in real estate. I put the book in the links below in the descriptions, and you can check them out. I used a CPA partner to prepare for our tax many years ago when we were still in California. I cannot believe that it has been 17 years ago already. You can get so many great tax tips that you can use to discuss with your CPA. I do hope that you consider using a real estate CPA as you grow your real estate business. They know tax codes well that can crucially for real estate investor, so they can help you legally save money on taxes. E is for equity. The equity is being paid down by the monthly mortgage payments, and the longer you hold the property in, the lower the loan balance left on your loan. Usually the rental income received from the tenants living at your rental property is used to pay down the mortgage for you. A is for appreciation. Appreciation is the bonus for rental property. It's good to be conservative to assume some 2 to 3% of appreciation per year, comparable to the general inflation rate. Therefore, your property value will increase based on the appreciation. Assuming you bought one rental with the purchase price at $100,000, and you can only put down 20%, that is $20,000, and borrow the bank 80%, that is $80,000. So when the property increase based on the inflation rate of 2%, then your rental property value is at $102,000. Increase $2,000. So the return on your investment based solely on the appreciation is 10%. That means 2,000 increase in value divided by the 20,000 for the down payment. Investing in real estate allows you to use the bank's money or other people's money. The increase in value you will not share with the bank. It's all yours to keep. The last one is L is for leverage. You can buy rental property by borrowing 80% of the purchase price from a bank when you have the income to support the current payment. If not, you can use other creative financing options like Harmony Lender, Private Lender Partner, or Equity Partner. Make sure you do your own due diligence for each rental project and know the rental income will exceed the monthly mortgage payment plus other expenses and still has some cash flow left at the end. Because of the leverage, you do not need to have a lot of money to invest in real estate. For some investors, they started with very little capital and have the discipline on their spending so that they can save up money for the down payment of a new rental requiring only 20% down, and they can leverage the bank money. Real estate is much better asset class to invest in to build long-term wealth because it has these 5 key benefits. Now you learn about the benefits of investing in cash flow rental properties, so you can compare it with other cash flow asset investments like investing in stock, bonds, mutual funds, or cash flow business that you are currently holding. Share with us your experience about other cash flow asset investments in the comments, so that we should all be aware to check them out. Let's learn, invest, and make an impact. Ciao!